Hey, what is happening, bulls and bears? We are back with another dose of economic reality. And we got a lot of financial economic news to get caught up on today. First of all, I'm at Lindo Lake. This is a new, well, not new, but it's newly revamped because they scraped it out and they redid it. And it's undergoing some restoration right now. So we're going to walk around here today. Now, the reason I haven't been doing as many outdoor videos is because of my foot, and I'm actually healed right now. So do you guys remember that video? I think it was about a month ago where I was walking around this other lake closer to my house called Lake Murray, and I was in that big medical boot. Well, I went to my foot doctor, my podiatrist, and he said, yeah, don't do that. Don't do that. It was only about a month after I broke my foot in two places. So now we're close to 2 months since I broke my foot, and I'm out here, no medical boot. So hopefully I'll be able to do more outdoor videos. So thank you for joining in. Now with the economy, with your money, my money, the financial system, the banks, right now we're living through historic times. Historic times. We've never seen this level of intervention, this much manipulation, this much money creation to keep asset prices and markets falsely inflated and propped up. So now the reverse is happening. We've got the unwinding of the balance sheet, which was unimaginable. No one ever imagined how big of an intervention, how much the Fed would come in and prop up these markets, how much debt they would buy, monetizing the debt. Just insane. No one, if you go back 5-10 years ago, no one predicted this level of debt, money creation. But when you look at it, the only way out of this is letting it collapse. And no one wants to be blamed for the collapse. So here's something they added into this side of the lake here. This is a kind of a lookout area. It's all revamped. And this is actually 2 lakes out here. And this is Lakeside, California, Lindo Lake. And this is the western side of the lake. No, I'm sorry, the eastern side of the lake. So it's very nice. Right now there's no fishing because they just redid it. I think they're going to be stocking the lake. So we'll see how that goes. But it's a nice place to come out and walk here, get some fresh air. And I'm glad to be out of that medical boot. But back to the economy, historic times that we're in. And, you know, we don't know how this is going to end up because the manipulation could change. Maybe in 6 months we'll be cutting rates. We'll be, the money guys will be buying everything under the sun. We're talking about Jerome Powell and his crew. When we say the money guys, and we'll see what happens. But for now, we've got deflation in the housing market. We've got a stock market selling off. And many of you remember we called the top of that stock market back in January. As soon as the Fed announced that they were going to go ahead and start shedding assets from their balance sheet, start raising rates or allowing rates to rise. And it's no surprise to most of us here, you know, what's happening right now. The question is how deep and how fast will this continue? Now let's talk about some more recent news here. And we like to talk about successful people, billionaires, investors, economists that make predictions and tell us what's going to happen. Of course, most of us know what's going to happen in general. Either more manipulation to the upside or more letting it just collapse, letting it drop. But Stanley Druckenmiller sees a hard landing in 2023 with a possible deeper recession than many expect. Of course, they went ahead and changed what's looked at as a recession, or they changed the definition of a recession. So even when a deeper recession happens, if you look at a lot of the news channels, they'll probably say, no, we're not in a recession yet. Or there is no recession because look at the job numbers. Even though 71% of people, their wages are not keeping up with the rising cost of living. That was a survey that just came out recently. So they'll still deny there's a recession no matter how much debt people get into, no matter how many people they have to come in and rescue and cancel the foreclosures, help people pay their utility bills. No matter how many people need help, they will not call this a recession. And, you know, so it's, you know, something that, you know, you and I can see. There could be tent cities on every corner, and they still wouldn't call it a recession. So Stanley Druckenmiller, I keep saying drunk, Druckenmiller, sees a hard landing in 2023. So hard landing, wow, okay, what does a hard landing look like? What do you think about that? More job losses. Instead of jobs that aren't keeping up with inflation, it's going to be no job. Crazy. Let's talk about retail for a minute. Most of us know here that the high-end retailers are the ones getting hit. The super high-end, not so much. Luxury cars, those are still selling. But as far as retail goes, Macy's stock falls to its 18-month low after plans to hire only 41,000 seasonal workers. So there's good news and there's bad news. Good news is Macy's hiring 41,000 seasonal workers. Hip, hip, hooray. Are they going to pay enough to keep up with inflation? Probably not. Here's the not so good part of that news. That number, 41,000, is 46% lower than last year. 46% lower. So good news is actually bad news when you really look into it. All right, some more good news. Georgia Pacific to build a $425 million paper plant. And that's going to add 220 jobs in Tennessee. And that's going to be paper plates, cups, stuff like that. So some manufacturing is emerging or re-emerging. New plants opening, and this place is in Tennessee. I wonder why they didn't open it in California. Maybe they don't want to be taxed into oblivion and have homeless tents popping up in their parking lot. I don't know. Maybe that's part of it. Tennessee, a much easier place to do business. So good to see that. So paper plates and cups, etc. Maybe people can't afford real plates, so we have to have more paper plates manufactured. Okay, we're gonna walk past these dogs. They're being good security guards. Speaking of paper plates, I went to Costco to get some paper plates, and they have of course, like Costco has, bulk. They had big, paper plates, like 180 or something like that. It was like $12. I didn't keep track of the price, but I don't remember paying $12 for paper plates at Costco. So I was like, okay, I'm just gonna go to the dollar store. Went to the dollar store. The stack was like this. It was like a piece of paper. It was like 30 plates for $1. 30 paper plates for $1. I guess that's good, but I felt ripped off. I didn't want to pay $12, but of course the 30 plates, that's gonna go very quickly than you do just buying the big stack, for 10 or 12 bucks, whatever it is now. And there's a few different kinds. I'm not sure if it was the coated kind, the non-coated kind. I try not to use the coated kind. Who knows what that stuff's made of. More news here. More layoffs. High-end retail again. Nordstrom's Cedar Rapids Distribution Center, 231 layoffs. Folks, we're just a short time out from the holiday shopping season, and we've got high-end retailers announcing 46% less hiring for seasonal workers than last year. We've got layoffs being announced by Nordstrom Distribution Center. What is going on? Is this going to be a dismal holiday season? Well, probably, because when you look at how savings has plunged, most Americans, over 70%, are in the most debt they've ever been in. The savings rate has plunged below financial crisis levels. People are draining their bank accounts to keep up with the cost of living. People are taking money out of their 401k, borrowing from the future to try to keep up with this insane rising cost of living. It's a slow motion collapse, folks. And I think most people are going to start to see it here that haven't seen it already. I think most of us here, we've been expecting this. None of this news, should be a huge surprise to any of us. But the average person that just looks at, CNBC for 5 minutes and goes to work, they're going to start waking up here if they haven't already. Another layoffs here, more announcements. Gap, 600 corporate jobs out of San Francisco and New York. There's going to be more people leaving those cities and maybe going to Tennessee or someplace else that's a little cheaper. Boeing, outsourcing 160 jobs to India. There we go, more outsourcing. Cost of living so high here, why not outsource it to a country that has lower cost of living? Another danger of the high cost of living, folks. The stock market wiped out $9 trillion from Americans' wealth. $9 trillion. Wow. So people that didn't know what was going to happen, that the money guys were going to reverse course and let these markets come down a bit, they're watching their 401ks drop. They're watching their retirement, their investment accounts drop. And I'd say more people than not were not positioned for the downturn, even though it was obvious, it was forecasted, it was telegraphed. You and I knew it, everyone on this channel knew it, but $9 trillion in wealth lost. And I'd like to see the breakdown between the investment firms and the little retail investor, you know, people with their E-Trade account or with their Fidelity retirement account. And I'm betting a big chunk of that, probably most of it, is the little guy, the retail investor. Another shot of the lake here behind. Not too many people out here. I don't think many people realize that this has opened up again. It's a nice walking trail. A few joggers out here, mostly just joggers though. This thing was fenced in for months. I'm thinking maybe close to a year. So a lot of people didn't realize that it's opened up yet, I'm thinking here. Back to retail, we know that the holiday season is a big time for retailers. And we've got some stocks here to talk about. Kohl's, I wouldn't consider Kohl's high end, but their prices are not cheap compared to alternatives like Target and Walmart. Maybe the quality's better. I haven't bought anything from Kohl's in a while. Used to shop there quite a bit. I used to get the coupon and try to feel like I wasn't wasting money shopping there. Kohl's down 48% this year. 48%. Wow. Target down 35%. And as I said before, the Kohl's people are switching to Target. The Target people are switching to Walmart. The people that can no longer afford Walmart are going to the Dollar Tree, the dollar store, the 99-cent store. The transition is taking place. Another one here, TJ Maxx. That's a pretty, hey doggy. TJ Maxx is a pretty low-cost retailer. But even TJ Maxx is down almost 20% this year. Wow. So there's no safe place as far as retail investing, as far as I can see, and I don't see a bottom. Why would there be a bottom when what's causing this is still happening? More tightening, meaning the Fed's going to be shedding assets from the balance sheet instead of buying the debt. That's going to cause rates to rise because you look at the bond yields. They have to rise to now attract real investors because the Fed's not going to be there as much or as heavy as they used to, so rates are going to rise. Mortgage rates are going to rise. People's credit card interest rates are going to rise at the same time as credit card debt's all-time high level. So doesn't end well, folks, but at least it is a slow motion collapse, so we can keep on stacking and keep preparing. Hope everyone here is doing well. Please let me know what you think down in the comments. We'll do some more walk and talks here now that I'm out of this medical boot and my foot is healed. Thanks for supporting this channel, everybody. Talk to everybody very, very soon. Bye for now. Peace.